based on the stats. So at the moment, but based on the current stats since the merge, the equilibrium supply of ETH is 47 million compared with 120 million today. So you want to trade, you want to know about, what should I buy, what should I sell. I haven't got any hourly or daily signals for you, but I've got a long-term signal for you. This is my long-term signal, and as the saying goes, don't tell me what to invest in, just tell me what you buy. I buy ETH daily. I had to, because I've got to buy laptops and stuff at the moment, I've had to reduce my DCA, but I'm still DCAing into ETH. So anyway, that's my shameless ETH plug and ultrasound money plug. You guys want to discuss this, or the gas? You want to discuss any of this?
Does the rate of deflation is that constant, or does that change over time?
So you can see here the supply of ETH is it looks just like a stock chart, doesn't it? It goes up and it goes down. So what's actually happening is the slope of this graph is equal to the gas price.
Yeah.
So this is exactly what the slope of the graph is. You see here with the base fee's got this massive spike, and then here it's gone vertical. That's it. So what's the supply of ETH? The answer is how busy is the ETH network. When the ETH network's busy, the supply goes down. When it's not busy, in this blue area here, the supply will go up. So if we look at, say, the last hour, you can use that toggle there. If you look at the last hour, there's some inflationary periods in blue, but there's basically mostly deflationary. So we are currently, right now, burning the ETH, and the ETH supply is now, so it was minus 12, now it's minus 15.
So can it become inflationary in the future at a constant rate?
Yeah. So ETH can become inflationary if the network's not used. That's the condition. If nobody wants to use ETH, it will be inflationary.
Okay, so that's quite a big case for it's like the other side of the story, right? So maybe if ETH doesn't succeed into what it says it is, people will sell it, people will stop using it, and it'll become inflationary, and then there'll be like net sellers on the market.
Yeah, I mean, it's totally supply and demand. So this is an automated process. The gas fee is in the protocol. This random or demand-driven graph, this is directly in the protocol. In fact, if we go to Etherscan, you'll be able to see it. So here are the latest blocks in Ethereum. I'll open up the two latest ones. So this is one block ago. This is the latest one. They're coming in regularly every 12 seconds now. So we have what am I looking for? Looking for gas fees. There's a gas use. So this gas use at the target is 15 million. So what should happen is the base fee in this block, it should go down a bit to the next block. So the base fee here is 16.9 Gwei. So I predict the base fee should come down just a little bit, maybe to 15 point something. Let's have a look. The next block. Okay, was it 16.8 to 16.7? Yeah, 16.93 to 16.7. So the reason is because the gas is below the 15 million target. So the protocol, so gas is the amount of computation used in the block. The maximum is 30 million, the target is 15 million. So if you've got between 15 and 30 million gas in the block, then the next block will have a higher base fee. And this is a thing being graphed on ultrasound money. Whereas if you've got less gas being used, if there's a low demand for the network, then the base fee will decrease. So the whole So the whole thing is it's supply and demand. It's raw economics. It's automated. There's no Vitalik in the middle. There's no monkey with a hand on the levers. This is automated in smart contracts. Well, it's actually the network code in this case.
What you're talking about related to the future of Ethereum going up and down, and you're saying in some ways that it's tied to gas fees and other things. Are you not saying the same thing as a lot of other specialists may say? The Apple company, Apple stock is going to go down because of interest rates, for example. However, millions, if not billions of people may focus on the Apple phone and not care about interest rate. And so the same thing with Ethereum. Is it not possible to have to weigh the purpose of Ethereum tied to smart contracts, tied to blockchain, practicality outweighs gas fees and what you're talking about.
All I'll say is the idea is that Ethereum is a settlement layer. So most people won't do a mainnet transaction, which is expensive. Most people will go on, say, Optimism, Arbitrum, ZK Sync, Starkware, and all of these are settling batches of transactions back to Ethereum as one big expensive transaction on Ethereum to settle, say, hundreds or thousands of transactions off chain. So yes, the user won't know, but they're still being settled back to Ethereum. Every transaction, even if the user doesn't know about it, is burning a little bit of ETH. So the idea is to get up to hundreds of thousands and millions of transactions off-chain being settled back to these on-chain mainnet blocks here. So, does that answer your question?
It sounds the same. You are focused on details like the central bank interest rate, and I don't see how you're addressing millions of people invest in Apple, for example, just because they like the phone. And millions of people, like myself specifically, I invest and bought Ethereum before I knew very much about the gas.
Yeah, but what I'm saying is if you have millions or tens of millions of users on any layer of Ethereum, they are burning a little bit of ETH on mainnet. But even if they don't know about it, because I am using Optimism, say, the gas fees are low, but Optimism is doing big transactions on mainnet to settle my transactions. So you don't have to know about Ethereum mainnet. Ethereum mainnet may well fade away in the public consciousness as people go to these layers on top, the layer 2, layer 3, whatever. The point is that this is the underlying economics of settling it, and that's.
And so this gas fee changing, you're saying, could completely wipe out Ethereum. It would make it impractical to continue any activity.
No, it's not wiping it out. It's doing expensive settlement transactions, settling thousands or tens of thousands of cheap transactions. So Ethereum becomes much cheaper to use on the layer 2s. The mainnet may well get more expensive to use. In fact, mainnet is supposed to get more expensive to use and pushing people to the scaling solutions.
And also the scarcity increases the demand, right? So there's less Ethereum available. So as more people know about it and want to buy it, it's becoming less and less Ethereum.
Which should be, in some ways, good.
Basically, you're not really meant to use mainnet anymore unless you're transacting with, say, well over $10,000. I'd probably do that on mainnet, but in fact, in my next job, I'm going to be paid salary on mainnet, and we're not talking tens of thousands. We're talking, thousands of dollars a month. So I then need to probably bridge it to Arbitrum. So every month I have to, or Optimism, I have to bridge my salary every month. Anyway, so this is Sean, long term. This is actually a 200-year projection. I know you can't really project anything 200 years out, but I think the economics of Ethereum have now been kind of finalised. The economics are now the way that people want it to be, and the projection is it will go down from 120 million today to roughly 47 million. But that's only based on current parameters, and if you monkey around with parameters, what's this? Change the issuance, or if you change the burn rate, and the burn rate is highly variable. So the issuance is quite constant, I think, but the burn rate highly variable. So if we're burning, say, 3% a year, you can see it's gone down to 36. It's just supply and demand. I forget exactly. I think one of them's an exponential, one of them's a linear, and basically there is a crossover where you get equilibrium. So the prediction is there is an equilibrium supply, but it depends on the parameters, and the parameters are unknown. So, but this is the idea. Oh, I've spoken long enough about ultrasound money. Is that okay if we move on, guys? Any more questions about ultrasound money? Brilliant. Let's move on. Okay, so Sean, did you send me that link here?
Yes, is it not? There isn't a link to the conference, just that main question for the conference. You're right, I will give that link.
Yeah, just ping